Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Match Group, a love story on the stock market or a toxic relationship. Latest financial results, Q4 2024. Match Group, the owner of Tinder and other dating apps, reported mixed quarterly results. Revenue reached $866.2 million, slightly below analysts' expectations of $868.7 million. Adjusted operating income was $361.6 million, beating estimates and demonstrating effective cost management. Operating margin was 26%, a decent level, but below top-tier tech companies. Gross margin remained strong at 71.73%, reflecting the profitability of the subscription-based business model. Earnings per share came in at 53 cents, slightly above projections. Q1 2025 outlook. The company expects revenue between $820 million and $830 million, lower than market expectations of $853.1 million. Match Group plans to enhance Tinder's monetization and integrate artificial intelligence features into its dating apps. Cash and profitability assessment. Quick ratio is 2.26, indicating strong short-term liquidity. Debt-to-assets ratio is 102.3%, suggesting high leverage. Match Group operates with significant financial debt. Market capitalization stands at $9.16 billion, and price-to-earnings ratio is 16.25, which is relatively low compared to historical valuations. Dividend yield is 2.08%, which is rare for a tech company. Technical analysis and market trends. Current stock price is $33.43, meaning the company is closer to support levels than resistance. Resistance is at $35.59, while support is at $31.61. Average purchase price of shares is $32.15, meaning most investors who bought at lower levels are currently in profit. Capital flow suggests stabilization after previous declines. Macroeconomic impact and trade war effects. The U.S. economy is in a slowdown phase, which could negatively impact consumer spending, affecting subscription-based services like dating apps. New U.S. tariffs on China, Mexico, and Canada have little direct impact on Match Group, but they could reduce consumers' purchasing power. Comparison to competitors. Bumble is growing in the premium segment and implementing more innovative AI-driven features. Facebook Dating, owned by Meta Platforms, still has a small market share, but remains a potential threat. Tinder remains the dominant dating platform, but Gen Z user growth is slowing. Chance of a short squeeze? High options activity suggests potential volatility, but the lack of significant short positions makes a short squeeze unlikely. Conclusion: buy or sell. Reasons to sell. Weak 2025 revenue projections, signaling possible growth slowdown. High debt levels. The company operates with significant financial leverage. Declining engagement among younger users could impact long-term revenue growth. Reasons to buy. Stock is relatively cheap. Price-to-earnings ratio is 16.25, suggesting potential undervaluation. Strong gross margin of 71.73%, indicating a highly profitable business model. Dividend yield of 2.08%, a rare feature in the tech sector. Final verdict. At the moment, selling appears to be the stronger option, but long-term investors might find the current price levels attractive if the company successfully increases user engagement and monetization. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU 2016/958 of March 9, 2016, supplementing Regulation EU number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.